Have lower mortgage rates finally boosted mortgage and purchase demand? I got a lot of data I'm going to unpack next to show you exactly what you need to know heading into the fourth quarter. If you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team to navigate inflation reports, purchase application data, what's going on with rates, there's a lot to talk about. We can make it really simple and help you come up with a numbers plan that will give you clarity on your next move. Just click on the link in the comments. Have mortgage rates finally boosted purchase demand? Well, we've got some data here, ladies and fellas, and mortgage rates last week were coming in at 6.29%. We just saw a really sticky inflation report that may or may not change the Fed's decisions later this week. I'll unpack that in a second. And the report was expected to show inflation of 3.3%, and it came in significantly lower at 2.6%, which caused a slight decrease in bond yields. And I would imagine we're going to see rates kind of trend a little lower here. Now, we're filming this a couple days earlier, so things could change here. This is as of the end of last week on September 11th, and purchase application data is the quickest way to identify demand because that means an agreement of sale was accepted. And what we've seen is that 5 out of the last 6 weeks, so we got 6 weeks of data here, 5 out of the last 6, we've shown positive weekly growth in purchase applications. And we're seeing that with offers being accepted and executed contracts. So that tells me the demand is here as we head into the end of the third and the beginning of the fourth quarter. This is a very positive thing because the housing market's been kind of blah all year. We've seen transactions have been pretty flat, and especially in a market like ours where inventory is a little short, this could really boost demand and be a benefit for sellers, which I'll explain in a second. Year over year, we're seeing a 23% increase in purchase application data nationally, and it's up 7.7% from the first week in September to the second week in September. So this is a big boon here. And we've seen mostly positive readings. There's been 17 positive readings, 12 negative readings, and 6 flat prints. So what that means is that there was some weeks it went down, more weeks it went up, and there was a few that were flat. So what we are seeing here is that the week-to-week growth aligns with the year-over-year data. That's really important. So what does all this mean before I get into the inflation report? Lower mortgage rates are helping the housing market. Shocker, right? Who would have thought that? And it's desperately needed because in other markets, not so much the greater Philadelphia area, what we're seeing is that people feel a little jammed up. They feel a little stuck, and these lower rates are giving some relief to the affordability concerns. And now we've got this inflation report. So the sticky inflation report, the CPI index, known for its core inflation, excluding food and energy, rose 3.1% for the month of August, in line with expectations and holding the same level as July. Month over month was a little hotter than expected. And we've got a Fed meeting this week. So we know the Fed's got this dual mandate of the jobs market and inflation. And I would be shocked if this inflation report changes the fact that most people, 88.8% chance, we're going to see a rate cut at the meeting this week. Now, it's probably only going to be 25 basis points. For the first time since the jobs report came out, this is when this really changed, the odds of seeing no rate cut aren't even being charted right now, according to the FedWatch tool from the CME Group. So it's clear to me we're going to see a rate cut this week. And the investors, they've already priced that into mortgage rates because I'm a big believer the investors are smarter than the Federal Reserve, and they know what they're doing. They're living in real time. So we're seeing lower mortgage rates, increased demand. We're seeing that the inflation report, even though it came in a little hotter or a little stickier than expected, it doesn't look like it's going to change what's going to happen next week. So what does this mean? What I am clear on is that with rates coming down, and I think rates might come down even a little more based on what happened with this inflation report, and we're seeing bond yields, they're retreating a little bit. We might even see lower rates come September and October. Now, I don't have a prediction machine here or a crystal ball. It doesn't work, right? We don't know what's going to happen here. I wouldn't be surprised if we see that happen because there is this sentiment now coming from the federal government. Jerome Powell changed his tune in August, so we could see lower rates. That's really the point. So what does this mean? If you're a seller right now and you already know where you're going, or you're trying to get into a market maybe where it's a buyer's market, you're relocating, or you're downsizing and already have your next home, this might be an opportunity to cash out high between now and the end of the year because we know inventory is going to pick up after January. It happens every single year with the exception of the COVID-19 pandemic. And these lower rates have brought some buyers back to the market where they weren't in the market maybe 3-4 months earlier. They felt shut out. They didn't like prices. They didn't like rates. As a buyer right now, if you pulled back, I'd pay attention to where mortgage rates are because there's some people that were looking to buy a home and they don't even know what's going on with mortgage rates. Pay attention. See what opportunities are in the market. Get in touch with a local expert who can help you navigate all that because there are opportunities to get the home that you want. Because given that we're in a low inventory market in the Northeast, prices aren't going to be coming down unless something really bad happens. So if you're waiting for that to happen, I would encourage you to look at where do I want my carrying cost to be? Where do I want my monthly payment to be? And come up with a numbers plan with your agent, with your trusted advisor, so you know exactly where you want the numbers to come in. And if you do that, you're going to be in great shape to be able to make the right decision when the right opportunity arises. So there's a little opportunity here. If you know your plans, you know where you want to go, the market's starting to shift. Do you want to be ahead of the shift or do you want to be behind the run and catching up to everybody else?